What other types of things could you measure in terms of performance? Well, in addition to measuring the return of the portfolio, which against a benchmark, which we just discussed, you could also measure the risk of the portfolio. One measure of risk that is mathematical and measured very frequently is called the standard deviation of the portfolio. That means how much is the portfolio going up and down? How volatile is the return of the portfolio? You can read all about standard deviation here. You might also want to look at different types of portfolios by looking at the return per unit of risk, and that is called the Sharpe ratio. So for every amount of volatility or risk your portfolio is experiencing, how much return are you getting? Obviously, the more return you get per unit of risk, the better your portfolio is doing. You can read all about this particular Sharpe ratio here. And finally, you can measure the asset allocation of your portfolio against the target that you set up in the beginning. The target was set up when you made your investment policy statement to help you decide how you are going to invest. And as time goes on, you want to measure that the percentage of the stocks, bonds, cash, real estate, etc. keeps matching up to your target asset allocation. What else can you measure in addition to financial returns? Well, you want to make sure that all the requests and factors that you listed in your investment policy statement are being carried out by your advisor and are showing up in your portfolio. And if you're looking for social impact, for example, you want to make sure that the social impact investments are in your portfolio and they're doing what you want them to do. Now, what happens if you have poor performance? You need to find out, if you have poor performance, what type of poor performance are you having? Are your securities not performing well? Is the asset class not performing well? So what do I mean by that? For example, is it the problem Apple stock and the company had some bad earnings, so the stock of Apple went down because the company or the security was performing poorly? Or is it just Apple stock is fine, the company is fine, but all the stocks are going down because people are pessimistic right now and growth companies are not in favor? Or is the problem that you created an asset allocation or a mix that really isn't helping you reach your goals? Is the portfolio too risky or too safe for what you're trying to do? So this is why we want to understand where and how and why we think we're having poor performance. Now, some portfolio software can tell you even more specifically where your poor performance lies, and that's called performance attribution software. You can ask your advisor if he or she has this type of information, and you really want to get into the details of what's causing your poor performance. Basically, once you see that your performance is poor, that it's below the benchmarks that you've created for your portfolio, you need to talk to your advisor and figure out a way to fix it. Now, there are a variety of factors which could be causing poor performance, and there's some basic rules of thumb you can follow if these things are happening. So number one, did the market crash? If the market crashed, you want to wait for the market to recover. Do nothing. This is not the time to sell. Did your asset allocation go off target? Well, then you have to rebalance your portfolio and bring it back to the target so it can do what you want it to do. Did you pick a poor quality fund? Did you not pay attention to the fact that the fund really wasn't full of good securities? Then you need to sell that fund. Did you pick poor quality stocks or bonds? Then you need to go sell them and buy something else. Did something change that affected your securities? You need to decide what it is and whether you should hold or sell. Did you change your risk tolerance? Then you need to redo your investment policy statement and communicate your new portfolio requirements to your advisor. And finally, did the advisor ignore everything that you told him or her to do? And if that's the case, you need to fire that person and get a new advisor. So what did we learn in this lesson? Performance measurement tells you how your investments are performing. You need to measure each security against an index, a benchmark that's correct for that type of security or fund. You want to use a blended, customized benchmark to measure the performance of a portfolio of securities. And finally, analyze what's causing performance problems before you try to make changes in your portfolio so that your investments can fulfill your goals and you can make money. Zendaya, Connor, Ella, what did you learn out of this lesson?
Insist on detailed performance information from your advisor.
Use the right benchmark for your portfolio.
You deserve good performance from your managers. If not, get new ones.
Well, that's it. That concludes our Investing 101 course. Thank you so much for joining me. In this course, we covered what is investing, how do we create a portfolio, how do we manage risks, how do we write an investment policy statement and work with an advisor, and how do we measure the performance of our investments. I hope you enjoyed learning. I certainly enjoyed teaching you, and I enjoyed working with Connor, Zendaya, and Ella, and Maradona. And I'm sure that in the future, we'll meet again with future courses and more details in the adventures of investing.